Hello everybody, welcome to Race by Grace Trading, a continuation. And then in this one we'll be doing risk to reward ratio. So what is your risk to reward ratio? Okay, so let's break it down. We'll close on this one also so that we can attempt on the other topic also. So your risk to reward ratio is simply the amount of capital which you are injecting in the market versus the amount of the reward which you are expecting on that specific trade. So, for example, if I put 30 pips, okay, I'm going to use 30 pips or 30 points because all traders are on different levels. So let's translate and say 30 pips is equal to $100. So if I'm risking $100 on that trade, let's say that is my risk, meaning my reward is going to be greater than that $100, meaning that I'm going to target something like $200 to be safe. Some people can go at 1.5, meaning risking one to make 1.5, so they are going to get $150. So they risk $100 to make $150. But that depends on your strategy. If you are so much accurate, you can do that. But the safest way is to risk one to make two. So in our example of risking $100 to make $200, and let's try for bigger uh, rewards. So let's say $100 to make $300. That's good in one trade. I know when we are talking about targets, I always say risk $100 to make $1,000, but I'm talking about in one trade. If you are good, you can do that. And there are times whereby I've done that where when you are flipping an account. So it's very possible. But for the sake of consistency and helping you out as you are getting started, when you are putting, let's say, for an example of $100, stick with me, you target at least $200, $300, and then if you're very good and you have a very good setup, you can even go as far as $400 to $500 on that trade. Now, because of the different levels which we are all on, let's take it into points or pips. And then these pips or points, watch the other video on lot size, pips, and indicator. Watch that video, it is going to guide you on what a pip is. It's just a point, a tick in which the market appreciates in value. So if a market appreciates in value, that range in which it appreciates, we call them pips values. So watch that video. Okay, so if for example I'm risking 10 pips on a trade, I'll best target 20 pips and above. 30 pips even better. If I get 50 pips, then it's a good plus because it will be a 1 to 5 risk to reward ratio, which is good. So risk to reward ratio is very important because sometimes you won't be accurate in the market. And I'm not saying this, sometimes you have the whole weekend, you're all blue, whole week you're all making money, and that's a good thing. But in an event whereby you do sustain a loss, especially when you are just getting started, it's important to make sure that your risk to reward ratio is in check.